Welcome back. You're watching The Money Show on ET. Now, we just had an in-depth discussion on how it's extremely important to ensure you give yourself adequate time for tax planning and not wait till the end of March to hurriedly just put in about a lakh of rupees in the first and the most easiest instrument there is. And hence, we had that intense discussion with Surabhi Marwa of EY. Well, let's move on and bring on board our Meet Your Fund Manager segment. And today, the fund we'd like to talk about is the HSBC Large Cap Fund. Let's take a look at what exactly this fund is about. As the name suggests, it invests in obviously large cap companies. So some of the top holdings as well from the banking space, the biggest names of the banking space. ICICI Bank, that's the top holding. And we do know what the stock has done. A great move seen over there at record high levels. So I'm sure HDFC Large Cap managed to benefit a lot because of that. 9.94% of gains seen on an 9.94% of the AUM is invested in ICICI Bank, 9.92 in HDFC Bank, which as well has been a steady, rock-solid performer, as is the case with the Reliance Industries, 9.65% of the AUM put over there. So the top three holdings itself have done very well for the fund. Moving on, there's HDFC Limited and Infosys, both of which have about 7% of the fund's AUM put in. Kotak Bank has around 5.68%. And then there are other names like SBI, where there's 5%, 4.87% of the AUM in L&T, and then 3.35% of the AUM in an Asian Paint. So if we have to look at it sectorally, banking would definitely be the key theme of the fund, followed by maybe financial services, consumer non-durables as well has formed a key part of the fund. Software too, 11.86% with the feature of Infosys seen over there. Let's bring on board now Tushar Pradhan of HSBC Global Asset Management. Tushar, let's start off first by talking a bit about this fund. Where does it invest? Tell us a bit about it.
So the HSBC Large Cap Fund has been around ever since our asset management company has been around. It's one of the oldest and the flagship funds for HSBC Asset Management. It probably has the best performance across this period because simply by survivorship, it's been one of the better performing funds across a very long term. It has always had a very large cap focus to investing, and even before the categorization, it was a very uniquely true to label large cap fund. And it has been large cap through most of the cycles that we have faced ever since its launch, which was in 2004. It has completed a significant period of its time in the Indian equity markets. And as we stand after the categorization, it is close to about 90% in large caps that the strategy has been used. So that's the focus of this fund.
You know, interesting to know that banking is a big part of the fund, as is the case with obviously a lot of large cap funds. But what makes you optimistic on the banking space in India?
See, I think if you step back for about 2 or 3 years ago, there was a significant improvement in the terms of banking enterprises entering the capital markets, namely the private banks. As we know that a significant chunk of the market share for all lending in India is the public sector banks, and they were the largest market shareholders across the industry. But with the introduction of private banks, the game really changed dramatically. The clients also started to appreciate the quickness, the technology, the convenience of the new private banks which were able to offer, and the growth which was available in the market over that period of time. So I think there was a distinct change in the manner in which credit got distributed. The markets expanded, and the new private banks actually took a significant chunk of this expanding market share as they go along. On top of that, the public sector banks had their own issues in terms of assets and the quality of assets eroded in the cycle going down, and they were practically not growing their book over this period of time. The private banks over this period have really expanded because the demand was taken up by the private banks. Capital was fairly freely available for most of these private banks, so growth was not a problem. As a result, we've targeted that section of banking where we feel high quality private banks taking larger and larger market share away from the established players is where the growth was, and we have been significantly rewarded for our faith in that. Banking clearly also is a proxy of the economy, so we can't go away from it. It has also increased substantially as a percentage of the index, and that's been 2 reasons why we have been very bullish on banking over this period of time.
Okay. Now, we have seen cases of even some of the high quality names, like even the top rated shares actually cause NAVs to slip. ILNFS, DHFL are cases in point. So, how do you ensure the quality of the stocks entering the fund? Is there a screening or a filtering process that you could take us through?
So I think to take a step back, let me assure you that HSBC has a global understanding of equities in a manner which is very uniform across the platform. So we have a significantly robust internal assessment based on what we call as profitability versus valuation. So we look at factors such as ROE and price to book value, and we compare the relative profitability given a certain valuation across the sector. And what it tells us is that the predictability and the sustainability of the ROE is really the place where sustainable valuations and probably expansion of valuations is possible. We've used this platform across all industries, but particularly banking provides us with a significant advantage here. So that's been the screen. On top of that, of course, we do the fundamental research, and we definitely get down to understanding the strategies of each of the banks separately. And we have a dedicated team and sector analysts who actually go out and make sure that what is available in the numbers is also borne out in the story and the management quality that we see. So these are some of the factors that we look at before selecting companies into the portfolio.
Tushar, of course, HSBC has small cap funds, mid cap funds as well. And that's what I'd like to talk about, the small caps and mid caps, which are making a nice comeback in 2020. So for all our mutual fund investors watching us out there, you think this is a good time to perhaps increase SIPs in, a small cap fund or a large cap fund? What's your opinion?
See, we have a view in terms of the risk assessment that an investor has to do for himself or herself. There is no one size fit all or a timing call that anybody can take at any point of time. It depends on your ability to take that risk. We all know that small and mid caps display significantly higher volatility. However, in the long run, that is rewarded if you stay through these cycles by way of higher return over longer periods of time. And that's a historical fact. While on the other hand, if you are unable to take the volatility in the interim, as we saw in the last 2 years, small and mid caps have done significantly worse than the large cap indexes. If you are unable to weather the storm, then I think the large caps have a much smoother ride through the markets. They also continue to contribute very positive double-digit compounded returns over the years, as we've seen. But they move a lot less in terms of the volatility. So if someone wants lesser volatility in the portfolio, they should allocate probably a little more to large caps. But if you're interested in the very long term, and we all know that the smaller companies eventually become bigger if they be successful, and the upside there is significantly higher, then some allocation clearly goes to small and mid caps. I think the allocation strategies should change with the investor's view of his risk, rather than saying now is the time to allocate more to small and mid cap. I think they continue to remain evergreen allocation options no matter where the market is. But it really depends on the investment plan and the longer term nature of our markets. So I would still encourage people to allocate to small and mid caps, because they represent probably the promise that India has, that in the next 10 or 15 years, some of these companies are going to be very, very large market leaders, and you want a share of that. So this is probably as good a time as is any day to start allocating to small and mid cap as well.
Okay, coming back to the HSBC large cap fund, then what's the time horizon an investor should have before he or she, comes to the decision whether to invest in the HSBC large cap fund or not?
See, the standard that we have seen in the industry now is that at least if you have a 3 to 5 year horizon minimum, and with some sort of understanding of the variable nature of the equity asset class, one can take a call on a large cap fund. However, if one really looks at history, there have been periods of 3 and 5 years where returns have not been as good as what is over the longer term. But that is really a matter of luck. Nobody can really estimate what the next 3 or 5 years are likely to be. But unless you have at least that term in mind, allocation to any equity funds is really at risk, because either you can have a very good experience or a very bad experience or an average experience. One cannot really predict it. But if you have any term beyond 5, 6 or 7 years, then the predictability of the kind of returns compounded over that period of time gets to be higher. And if you are at a 10-year expectation of a horizon, clearly you have much more predictability of what kind of return you can expect over that term, as opposed to trying to take a call between 3 to 5 years. So I would suggest that at least a 3 to 5 year term, and obviously much more weighted toward the long term is for investors who want to take up equity funds.
Okay, Mr. Pradhan, thanks so much then for joining us on this edition of our Meet Your Fund Manager segment. I hope this has been able to, for all our viewers watching, I hope it's helped them take a decision on whether they would like to invest in the HSBC Large Cap Fund, whether it suits their investment objective, time horizon, among other things. We will take a very short break right here on the show. Do come right back.